A volatile week. Gold dropping briefly below $3,000. Copper falling off a cliff. What are we at? $4.34 after recovering. Hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. Surveying the landscape, I want to say surveying the damage of this last week in the markets. Of course, miners have joined the sell-off, so perhaps an opportunity. I mean, I think of the $800 billion, or is it $1 trillion that the EU has said they want to spend on military. You think, surely $50 to $100 billion of that is going to be used for metal, if not a lot more. And I just wonder to myself, what is that going to do, that demand for metal, to prices? So all of this volatility, of course, the result of tariffs, at least in its surface explanation, as we like to say here. The technicals have been pointing to a bit of a top here for a while, but our reason is the tariffs here. So last week, as a result of these tariffs being announced on China, who seems to be perhaps the largest target of U.S. President Donald Trump, China has further restricted rare earth exports. Here's the story. This is Reuters via mining.com. China hits back at U.S. tariffs with rare earth export controls. China placed export restrictions on rare earth elements on Friday as part of its sweeping response to U.S. President Donald Trump's tariffs, squeezing supply to the West of minerals used to make weapons, electronics, and a range of consumer goods. The move, which Beijing had long hinted was possible, further ratchets up trade tensions between the world's two largest economies and leaves American manufacturers scrambling for fresh supplies of the critical minerals they have relied upon for decades. And that does bring up our feature content today. Bill Hightower, Vice President of Corporate Affairs in the United States at Ferroglobe USA, and they make silicon, an often overlooked metal. It is an alloy. And so I asked Bill all about the history and the importance of silicon, as well as what Ferroglobe is doing and their relationship with the U.S. government, how they approach the whole business, and of course, China's domination of the market, and how Ferroglobe has managed to survive despite the low prices of silicon that it produces. So that is our feature content. And also coming up this show, we have Michael Tuerk, founder of the Aktien Experte newsletter, who is also resurrecting the Munich Mining Conference. So that will also be in this week's spotlight. So lots to look forward to this episode. Let's return to this story. Beijing announced the controls late on Friday as part of a broader package of tariffs and company restrictions in retaliation for Trump's decision to hike tariffs against most Chinese products to 54%. The export curbs included not only mined minerals, but permanent magnets and other finished products that will be difficult to replace, analysts said. The move, which affects exports to all countries, not just the U.S., is the latest demonstration of China's ability to weaponize its dominance over the mining and processing of critical minerals. 7 categories of medium and heavy rare earths, including samarium, gadolinium, terbium, dysprosium, lutetium, scandium, and yttrium-related items will be placed on an export list as of April 4th, according to a Ministry of Commerce release. Lockheed Martin, Tesla, and Apple are among the U.S. companies that use Chinese rare earths in their supply chain. And we have a quote from Mel Sanderson, a director at American Rare Earths, which is building a rare earths mine in Wyoming. Quote, China made that list strategically. They picked the things that are crucial for the U.S. economy. End quote. While the export controls stop short of an outright ban, Beijing can throttle shipments by restricting the number of export licenses it issues. And we heard about this 2 weeks ago from the Almonte founder, who was saying, the export restrictions can sometimes be worse than the ban. China's move will create a, quote, scramble for access to the limited sources of alternative supply, namely in Japan and South Korea, end quote, said Ryan Castillo, founder of consultancy Adamus Intelligence. 2 industry sources said Chinese export restrictions on some rare earths are a concern for some U.S. aerospace manufacturers because they are sole sourced from China for use in avionics. RTX and Honeywell declined to comment. Boeing and GE did not respond to requests for comment. The U.S. government has stockpiles of some rare earths, but not enough to supply its defense contractors in perpetuity. Beijing has already imposed outright bans on the export of 3 metals to the U.S. and slapped export controls on many others. The move to restrict heavy rare earths are especially important because China has even tighter control over these elements, said David Merriman at consultancy Project Blue. Quote, there is currently only one heavy rare earth element-focused operation outside of China, Myanmar, and Laos, end quote, he said, adding that China has close involvement in supply chains from Myanmar and Laos. So there's only one heavy rare earth operation, and wait till you hear this. That mine, Serra Verde in Brazil, ships minerals to China for processing, Merriman added. Quote, China is willing to escalate, end quote, said Nathan Pekarsik, co-founder of the geopolitical consulting firm Horizon Advisory. Quote, this is likely an opening salvo in an iterative game of negotiation with the U.S., end quote. Friday's move is likely to galvanize efforts in the West to build alternative supply chains, according to Mercator Institute for China Studies analyst Jacob Gunter. Progress towards the goal has been slow. Quote, it's going to take time, end quote, said Mark Smith, CEO of Neocorp Developments, which has permits for a $1.2 billion rare earths mine in Nebraska, but needs financing. So here we have a rare earth mine in Nebraska that needs financing. Shares of Neocorp fell 8% on Friday, while shares of USA Rare Earth, which is building a rare earth magnet facility in Oklahoma, jumped 20%. Shares of MP Materials, which owns the only U.S. rare earths mine and relies in part on China for processing, fell 10%. Very interesting. And you know what that seems to say is the one company that did well, USA Rare Earth, is building a rare earth magnet facility. In other words, they're building the processing facility. They're not just concerned with the rare earths themselves. Las Vegas-based MP said in a statement that China's move, quote, reinforces what has long been clear. America must secure an end-to-end rare earth supply chain to protect its industrial and national security, end quote. Massachusetts-based rare earths processing startup Phoenix Tailings, which recycles the metals from electronic waste and other sources, aims to boost its annual production from 40 metric tons today to 4,000 metric tons by 2027. Quote, China's moves just further encourages us to double down on our expansion plans, end quote, said Phoenix CEO Nick Myers. For companies that buy equipment from rare earths industry suppliers, the worry is compounded that they may lose access to important machinery that is made in China. Quote, the real concern for us is whether this trade conflict grows further, end quote, said Wade Senti, president of Florida-based Advanced Magnet Lab. So, huge story there. And we had another interesting response from an unlikely source, Chamath Palihapitiya, an early employee, I believe, at Facebook, and one of the hosts of the All In podcast, a pretty large podcast, and again, more out of tech, put out this tweet, which I thought was interesting. Keep calm, carry on. This may be a good moment to let everyone know that I control one of, if not the largest rare earth supplies outside of China. At full capacity, it can be 25% of what the world needs, all located within countries allied with the U.S. and the U.S. itself. Now, who knows on the accuracy of this statement, and is this the processing of the metal? Is this just the metals themselves? But the reason I highlight this is once again to show how minerals and metals have really moved to the center of the conversation, where you're getting fairly prominent tech celebrities using metals, in this case rare earths, as a kind of flex, which I think just from the culture of mining is quite interesting. Let's continue. U.S. and DRC near minerals deal, according to a report. This is by staff at the Northern Miner. The United States and the Democratic Republic of Congo are discussing an agreement that would see U.S. companies take greater control of critical mineral assets in exchange for support for the Kinshasa government, the Financial Times reported. Progress has been made on a potential deal, Masad Boulos, U.S. President Donald Trump's senior advisor for Africa, said late last week. Boulos met with DRC President Félix Tshisekedi in Kinshasa Thursday, and the pair discussed trade relations and other topics, according to a statement from the presidency. Quote, you heard about an agreement on minerals. We have taken note of the DRC's proposal, and I'm happy to say that the president and I have agreed on a way forward for its development, end quote, Boulos told reporters in Kinshasa. His comments were broadcast by Radio France International. And Boulos continued, quote, stimulating U.S. private sector investment in the DRC, particularly in the mining sector, is a shared goal that contributes to the prosperity of both our countries. But there can be no economic prosperity without security, end quote, Boulos said in French. Quote, the United States remains determined to support an end to the conflict, and we are discussing next steps with our Congolese partners, end quote. And as it says here, U.S. startup Cobalt Metals is among the companies that are interested in the DRC's massive Manono lithium deposit, the FT said. So again, we're seeing prominent tech moguls, of course, Cobalt being backed by Jeff Bezos and Bill Gates, again, showing deep interest here in metals. And we also have an update on the Congo and the M23, which is the cause of the whole minerals deal between the U.S. and the Congo that is in the works. Congo and M23 rebels hold first talks after months of conflict. This is Reuters via mining.com. And it says here that Congo's government and M23 rebels last week held private talks in Qatar for the first time since the rebels conducted a lightning offensive in the country's east, a source briefed on the discussions told Reuters. Reuters reported last week that Kinshasa and M23 plan to hold their first talks in Doha on April 9th, but the source with knowledge of the situation said private talks were also held last week. They were positive, the source said, speaking on condition of anonymity, and prompted the rebels to withdraw from the strategic town of Walikale in an area rich in minerals including tin as a goodwill gesture. M23 and Congo's government did not immediately comment on Saturday. So continuing on, probably one of the huge stories of the mining world last year was the Lobito Corridor, a railway that moves from Zambia through the DRC and then goes through Angola and goes over to Lobito Port on the west coast of Africa. And when U.S. aid was being cut, it seemed as if the U.S. had abandoned its financial commitment to the project. Well, we have an update, and this is Reuters. U.S. committed to funding Angola's Lobito Rail Corridor despite spending cuts, diplomat says. So the U.S. ambassador to Angola, James Story, sought to allay fears on Wednesday. Story was accompanied by European diplomats, Angolan officials, and executives from Lobito Atlantic Railways on a tour of projects in Angola. Asked if funding for the Lobito Corridor was at risk, Story said, quote, not at the moment. All the projects with the DFC and also with the Exim Bank are there, and we're working on them. Various organizations say they were moving away from this project, but that's not true. End quote, Story said. And we also have a quote from Lobito Atlantic Railways CEO Francisco Franca, who was part of the tour and said DFC financing contracts, quote, were currently in the final stages. Quote, in 2 or 3 months' time, we expect to have the contracts signed and then the normal international financing procedures will follow. End quote. So it sounds like that issue has been ironed out. Moving to West Africa, we have an update from Barrick on the Barrick Mali situation, courtesy of Reuters. Barrick says committed to reaching a mutually beneficial resolution in Mali. And this is dated this morning. Barrick Gold remains, quote, fully engaged and committed to reaching a mutually beneficial resolution, end quote, with Mali to end a dispute over its assets there, its chief operating officer for Africa and the Middle East said in a memo seen by Reuters on Saturday. The Canadian miner and Malian government have been locked in a dispute since 2023 over the implementation of the West African country's new mining code, which gives the state a greater share in Barrick's Loulo-Gounkoto gold mining complex. Reuters reported on February 19th that Barrick had signed an agreement to end the dispute, which then went to the state for formal approval. While there has not been any major hiccup since then, the deal is taking some time to be finalized, one person close to the process told Reuters. In the company memo sent to staff on Saturday, Sebastian Bach said there are, quote, no major updates at this stage. As a reminder, all non-critical operations remain temporarily paused until further notice, end quote. So it kind of sounds like this memo has been leaked to Reuters, if I had to speculate, in order to create some urgency perhaps, or to remind the government of Mali probably to sign their part of the deal. It sounds like they are still sitting on this, interestingly. And at the end of the day, Barrick has capitulated with this agreement to provide almost $500 million in payment. And finally, on the Nippon Steel U.S. Steel saga, Trump orders fresh review of Nippon Steel's bid for U.S. Steel. This is Reuters via mining.com, so this deal also taking a long time To finalize, as it says here, this is Reuters via mining.com, President Donald Trump on Monday directed a powerful U.S. national security panel to take a fresh look at Nippon Steel's bid for U.S. Steel to help determine if, quote, further action, end quote, is appropriate, raising hopes for an elusive green light for the deal. And the memo reads, quote, I direct the Committee on Foreign Investment in the United States to conduct a review of the acquisition of U.S. Steel by Nippon Steel to assist me in determining whether further action in this matter may be appropriate. Nippon Steel said it was pleased by the news. Quote, we have been confident from the outset that an objective, fact-based review of our proposed partnership with U.S. Steel will show that it strengthens American economic and national security, end quote. A spokesperson for U.S. Steel said the company looks forward, quote, to continuing to work closely with President Trump and his administration to finalize the significant and important investment, end quote. So it continues with U.S. Steel. So a wonderful show ahead of us. We have Bill Hightower, Vice President of U.S. Corporate Affairs for Ferroglobe USA, discussing silicon and everything that Ferroglobe is doing to help fulfill the needs of the supply chain in the United States and all of the different functions of silicon. A fascinating discussion there. And also Michael Tuerk, organizer of the Munich Mining Conference and founder of the Aktien Experte.de newsletter, and many more head-turning news stories. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Michael Tuerk, organizer of the Munich Mining Conference and founder of the Aktien Experte.de newsletter, for this week's Spotlight.
Join us today. I'm very pleased to welcome to the show Michael Tuerk, organizer of the Munich Mining Conference and founder and newsletter writer of Aktien Experte newsletter. Michael, welcome to the show.
Hello, happy to be there, and thanks for the invitation.
It's great to see someone who is involved in mining and stocks in Germany. And so tell us a little bit about the Munich Mining Conference. You're organizing it this year. What are you up to at this year's conference?
Yes, so Munich has a great history for mining shows. The previous Edelmetallmesse was from 2005 to 2019. Then COVID stopped it and it never returned. And now I will finally bring it back to Munich in October 2025. And yes, I believe it's a very good timing because gold is over $3,000 now. And the companies have a great interest for this conference, what I have seen so far.
Yeah, very interesting. I mean, Germany does have the Frankfurt Stock Exchange. There's a culture of being interested in mining in Germany, isn't there?
Exactly. Yes. So with Frankfurt, there is the Deutsche Goldmesse from Kai Hoffmann, which is also a very good show. Germany, or in general, Europe, is a very important market for the Canadian and American companies, as the German people love the mining stocks. And yeah, that's it.
So when is the conference going to take place, and what can companies expect if they participate?
So the mining show is on the 3rd and 4th October 2025. And there are a few reasons why people should participate in this. So the first thing is it's the chance to meet new people and new investors, because when you look to the other shows in Zurich, in London, when you go there, you almost meet always the same people. And Munich has totally different people, and it's more retail based and not much on the institutional investors based. That's the first thing. The second thing, it's a cheap opportunity to start marketing in Europe. Another very interesting thing is that Jochen Steiger with Swiss Resource Capital is the media partner. He's doing interviews on our show with all the interested companies. It's for free. After he will distribute to his network, and it will be also distributed on YouTube. So free marketing, which is always good. I will have some very well-known speakers, for example, Florian Grumes. I believe most of the people know them, and a few others from the German market. And it's a very good timing for the conference. So gold is $3,000, and it's the week before the Nordic Mines and Funds in Stockholm. So both conferences can be very well combined, and you have only one times the travel cost when you're a company.
Okay, excellent. And how large is this conference in a sense? And if you're a mining company that's interested, what's involved in participating at the Munich Mining Conference?
When we go back to the past, this conference was in the average round about 5,000 retail investors are attending, which means this was the biggest conference in Europe until it stopped from COVID. So from this, it's totally different to the other conferences, but very large from the size of the investors and the people.
Okay, excellent. And as far as companies, how many companies do you expect to participate?
So 43 companies are at the moment fully signed up, and I'm in very advanced talkings with another 20 companies. I can have there up to 80 companies from the space, and a few booths are still available. And the cost is $5,000 for the companies to participate, which is, by the way, very cheap in comparable to another conferences where there at the moment the price is between 12 to 14,000.
Very interesting. And you also run a stock newsletter. You're the founder of Aktien Experte.de. Tell us a little bit about the newsletter. How did you get started and what is the focus of the newsletter?
I bought my first stock in 1999 when I was 15 years old. It was the AOL stock, American Online. And I just bought only one stock of it, which makes no sense if you do it. But however, I want to be a shareholder and bought one stock. And from then the stock market grabbed me. And time by time, I saved always more money and invested it again. Then in 2006, I started my own newsletter, Aktien Experte.de. And from there, I started to share my experience in the stock market and my favorite stocks with my readers. And then in 2010, I finally became a stock market millionaire. So this means it was only 11 years after my first investment, and I was then only 26 years old, and then I was already a stock market millionaire. And this is why I believe people should much more invest in stocks and not put the money to banks or to insurances, because it never gives you that return that you have in the stock market. And my stock market newsletter now has over 200 paid subscribers and is one of the biggest stock newsletters here in Germany, Austria, and Switzerland. And even to the fact that I'm only 40 years old now, I have already 25 years of experience in the stock market. When I look back now, this seems quite impressive for me.
Well, this is the dream, isn't it? To become a millionaire through stock investing. So right now, then, what sector do you focus on? You're doing the Munich Mining Conference. Are you focused on mining? What are you excited about right now in your newsletter from a stock perspective?
So there are two main sectors that I'm investing in, that I'm looking for. This is gold and silver. So silver, in my eyes, is very, very interesting because gold is over $3,000 now. So silver has to follow at one time. I like very much, for example, Santa Cruz silver. Santa Cruz silver has at the moment a market cap of just 125 million US dollar, and making at this silver price is 100 million US dollar free cash flow. So they're just trading at a little bit more than over 1 year cash flow per year, which is incredibly cheap when you compare it with another silver companies. They are trading with 10 to 15 times their yearly cash flow. So I believe this stock has really a great potential.
Okay, excellent. And are there other sectors that you're interested in? I assume gold is exciting for you as well.
So with gold over $3,000, these gold stocks are real cash machines. So there I like, for example, very much Denarius Metals. This is the former management of Gran Colombia Gold, Aris Mining, which is now almost $1 billion company. They have the Zancudo and the Lomero Poyatos project. The Lomero Poyatos project is in Spain. Zancudo is in Colombia. They are starting production within a few weeks from now. When we see it in a full year prospect, they will make in the first year of full production more cash flow as the company is at the moment valued on the market. So this is something which I like very much. Then Mineros, it's also a Colombian gold producer. It's one of the biggest gold producers in Colombia. I was get in touch with the stock at the One-to-One Mining Conference in London 2024 in May. So this was just 10 months ago. Then the price was at $1.16. I recommended it to my newsletter readers. The stock now is trading at $2.35, which is over 100% up. However, it's just trading only 2 times the yearly cash flow. This is still a very cheap stock. And last one, which I also won't mention when we talk about gold, is also mining. It's a very cheap, say only trading around about 2 times the yearly cash flow, and has a resource of more than 5 million ounces in Burkina Faso. By the way, all these three companies that I have said now, they will be participating in the Munich Mining Conference, the same like Santa Cruz Silver. So people should go to there. It's important to see interesting new investment opportunities.
Okay, so we talked about precious metals. Are there any other sectors out there in the markets that are interesting you right now, Michael?
Yeah, for me, so tungsten looks very promising. It's critical minerals, and the US and the EU must make them independent from China, which are produced around about 70% of tungsten. And here I would recommend the stock from American Tungsten. It has probably the most advanced tungsten project in the US, which can be brought back into production within 80 to 24 months from now. I recommended the stock in December 2024 to my readers when it was just 35 cents. And then within 3 months, the stock went up to over $2. And this is a gain of more than 500% in just 3 months. This is incredible. Now the stock is now below $1. And I believe it's a very good buying opportunity in the mid to long term again.
Well, I'm sure our audience will appreciate you sharing some of your recommendations with us. And so as we wrap up here, Michael, so if people want to attend the Munich Mining Conference, or if a company wants to participate, or if they want to subscribe to your newsletter, actionexperte.de, what should they do? Where should they go?
If they want to go to the Munich Mining Conference, we have their own website for the German people and one for the Canadian, American companies. So if we're talking about the American Canadian companies, so it's www.munich-mining-conference.com. People can request there for a booth. They can ask for more details. And about my Aktien Experte stock newsletter, it's www.aktienexperte.de. Aktien Experte, by the way, means like stock expert in English.
Excellent. Michael Tuerk, organizer of the Munich Mining Conference and founder of actionexperte.de newsletter. Thank you for joining us and telling us all about what you're working on in Germany.
Thank you to be there.
And thank you once again to the Munich Mining Conference and actionexperte.de for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, an interesting headline out of Canada: Mining dominates Poilievre's speedy permits list. This is by Colin McClelland at the Northern Miner. Mining investments make up nearly all resource projects Conservative leader Pierre Poilievre would approve within a year if elected Canadian Prime Minister this month. Campaigning in British Columbia on Monday for the April 28th election, Poilievre said he would start a one-and-done approvals process to accelerate 10 projects. These would need one application and one environmental review, he said. His list includes NextGen Energy's Rook I uranium project in Saskatchewan and several in Ontario. First Mining Gold's Springpole project, Agnico Eagle Mines' Upper Beaver underground gold and copper mine, and roads to access Wyloo Metals' Ring of Fire project. Leading the list is the second stage of a natural gas liquefaction project in the northern BC port of Kitimat. That venture is being proposed by LNG Canada, a consortium led by Shell, which holds 40%, and Malaysian state petroleum company Petronas with 25%. Quote, "I'm convinced we can get these projects approved in as little as 6 months," end quote, Poilievre said in Terrace, about 60 kilometers north of Kitimat. Quote, "In Germany, they built an LNG import terminal from concept to completion in 178 days. That's not the approval process, that was approval and construction," end quote. So Canada getting more serious in developing its resources. And continuing on, a small update on the Ukraine-US minerals deal. Ukrainian team to travel to US this week to discuss minerals deal. This is Reuters via mining.com. A Ukrainian team will travel to the United States early this week to discuss a minerals deal. A Ukrainian source familiar with the situation told Reuters on Monday. U.S. President Donald Trump's administration has proposed a more expansive minerals deal, which Ukraine has been reviewing in recent days. So many different deals in the work here. So continuing on, we got an interesting column in Reuters called Trump's Tariffs and Tin. And this was published on April 4th, so about 4 days ago. U.S. President Donald Trump's tariff blitz has shocked financial markets, but the LME base metals complex got an early preview of the likely mayhem. The imposition of 25% tariffs on U.S. imports of aluminum has dislocated the light metals global supply chain, while the threat of similar levies on copper has generated an unprecedented disconnect in transatlantic pricing. Micro-tariff turbulence is now overlaid with macro-tariff turmoil as markets take fright at the risk of a full-blown trade war. The London Metal Exchange's index of base metals has slumped 6% this week as reciprocal tariffs move from threat to reality. Only one metal has escaped the tariff tsunami. Tin continues to outperform the rest of the LME pack, buoyed by its own supply chain chaos. LME 3-month tin gained 25% over the first quarter of 2025, eclipsing even gold's stellar run. A series of supply shocks has generated a roller coaster ride for tin traders. The market sold off on news the giant Manma tin mine in Myanmar would restart after an 18th-month absence, before rebounding when Alphamin Resources announced it was closing its BZ mine in the Congo due to the escalating insurgency in the east of the country. The devastating earthquake in Myanmar, throwing fresh doubt on Manma's return, has propelled tin even higher. Investors have rushed to join the action. Fund long positioning has hit record levels. LME stocks are sliding and time spreads tightening, adding to the volatility mix. Bulls, however, should note that there is no shortage of tin in China. Shanghai Futures Exchange stocks have risen by 47% so far this year, and at 9,800 metric tons are the highest since September. So interesting developments there. Continuing on, Myanmar's tin-rich Hua State delays mining resumption meeting after earthquake. This is Reuters via mining.com. Myanmar's tin-rich Hua State has postponed a meeting to discuss the resumption of mining in the region, a regional spokesman confirmed on Thursday. The meeting, originally called for Tuesday, was postponed and no alternative date was set, according to a notice dated Monday and confirmed by a Hua State spokesman on Thursday. The meeting had raised hopes among traders that an almost 2-year ban on mining in the region could soon be lifted. Hua State produces 70% of Myanmar's tin exports. Myanmar is the world's third largest producer and China's biggest supplier. A tin trader who works for a company that operates in Myanmar, speaking on condition of anonymity, said it was difficult to predict when operations could resume, as the extent to which infrastructure and power plants were damaged was unclear. China's imports of tin ore from Myanmar more than halved last year, customs data showed. Increased supply worries as a result of last Friday's earthquake pushed tin prices on the Shanghai Futures Exchange to $41,000 per metric ton on April 2nd, the highest since May 22, 2022. Tin prices on the LME also hit the highest since May 2022, reaching $38,000 a ton. Continuing on, Kazakhstan says it has discovered 20 million ton rare earth metals deposit. This is Reuters via mining.com. Kazakh geologists have discovered a rare earth metal deposit with estimated resources of more than 20 million metric tons at a depth of up to 300 meters, the country's Industry and Construction Ministry said in a statement on Wednesday. Kazakhstan does not currently feature in the U.S. Geological Survey's list of countries by rare earth metal deposits. If confirmed, the deposits would place Kazakhstan behind only China and Brazil by size of reserves. In a statement on Telegram, the ministry said that the Zana, Kazakhstan site contained neodymium, cerium, lanthanum, and yttrium, and that its average rare earth metal content is 700 grams per ton. It did not specify which companies may develop the site or when. So again, so much is dependent on the processing. Continuing on, U.S. produces most uranium since 2018, EIA says. This is Reuters via mining.com. The U.S. produced more uranium concentrate, which is used to fuel nuclear reactors, in the last 3 months of 2024 than it had in any quarter in the last 6 years, the U.S. Energy Information Administration said on Wednesday. Higher prices of uranium and the resumption of production at the White Mesa Mill in Utah, which is the country's only active uranium mill, spurred the output increase, the EIA said in a report. The rise of U.S. electricity demand brought by data centers, onshore manufacturing, and the electrification of transportation and buildings has renewed interest in power supplied by the country's long-struggling nuclear energy industry. Companies are now in the process of attempting to restart 2 fully shut nuclear reactors, including one at the former 3 Mile Island facility. In an effort to kickstart the domestic supply chain for nuclear power, the federal government offered contracts to 6 companies to make uranium fuel late last year. Continuing on, Chile to cut 2025 copper price forecast, Wall Street Journal reports. This is Reuters via mining.com. Chile, the world's largest producer of copper, is preparing to slash its official price estimate for 2025, the Wall Street Journal reported on Saturday. The Chilean government will cut the estimated average price to $3.90 to $4 a pound from a current projection for the year of $4.25 a pound, the Wall Street Journal said, citing a person familiar with the preliminary calculations. And continuing on, First Quantum pulls back from arbitration on Panama copper mine. This is Bloomberg News via mining.com. First Quantum Minerals dropped one of its arbitration cases against Panama and suspended another, signaling potential for more negotiations with the nation over the company's copper mine that's been shuttered for more than a year. The company said Monday it agreed to discontinue arbitration proceedings with the International Chamber of Commerce that sought compensation for Cobre Panama's closure. It also said it had suspended arbitration filed under the Canada-Panama Free Trade Agreement. The move paves the way for renewed talks with Panama over the future of First Quantum's $10 billion mine. The government ordered it to shut in December 2023 amid sweeping anti-mining protests and political upheaval. Panama's president, Jose Raul Molino, has repeatedly said his government would only negotiate with First Quantum if they first ended their arbitration proceedings against the country. And the company said in a statement, quote, "The company reiterates that it remains committed to dialogue with the government of Panama and to being part of a solution for the country and the Panamanian people." Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. Quite an interesting week here. For those that were paying attention, we saw the U.S. 10-year bond go below 4% before recovering. The U.S. 10-year bond is currently yielding 4.14%, down only 0.04% on the week after quite a roller coaster ride there. The UK 10-year gilt is yielding 4.65%. That is 0.04% higher than last week. The Italy 10-year bond is yielding 3.87%. That is up 0.08% on the week. The German 10-year Bund is yielding 2.66%. That is down 0.02% on the week. And the Japanese 10-year bond yield falling to 1.24%. That is down 0.25% on the week. So a little bit of a hint of the action that we saw in the Japanese 10-year bond price, but really looking at just the weekly prices, one might miss the dramatic action that occurred there in the bond market in the last 7 days. Turning to precious metals, gold is trading at $3,015.70 per ounce. That is down $143 on the week and was actually as low as $2,982 on the futures market on CNBC. Silver is trading at $30.10 per ounce. That is down $3.65 on the week. Platinum is trading at $898.20 per ounce. That is $112 lower on the week. And palladium is lower at $877 even. That is $106 lower on the week. And turning to industrial metals, copper is trading at $4.26 per pound. That is 76 cents lower than last week. Iron ore is trading at $102.64 per metric ton. That is 21 cents higher. So iron ore edging slightly higher on the week, but pretty much even. Aluminum is trading at $1.08 per pound. That is down 7 cents on the week. Lead is trading at 85 cents per pound. That is also down 7 cents on the week. Nickel is back below $7 at $6.58 per pound. That is down 64 cents on the week, and again, below $7. Tin is trading at $16.05 per pound. That is down 38 cents on the week and remaining above $16. Cobalt is trading at $15.39 per pound. That is 4 cents higher on the week. And lithium finally breaking $10 on the downside, trading at $9.93 per kilogram. That is down 27 cents on the week. Uranium is trading at $64.90 per pound. That is 55 cents higher than last week. And zinc is lower at $1.20 per pound. That is 10 cents lower on the week. Zooming out, the volatility and downdraft in markets affecting metals, but in a mixed way with some metals being affected more than others. You think of nickel and you think of lithium. While tin is still above $16. You think of cobalt, uranium up a little bit, and those are your metal prices. Coming up, I'm very pleased to welcome Bill Hightower, Vice President of U.S. Corporate Affairs for Ferroglobe USA, to the Northern Miner podcast for the very first time. We discuss Ferroglobe's operations and its mission to provide silicon to the U.S. supply chain, as well as Bill's view on tariffs and how that could help domestic production of metal in the United States, and also larger geopolitical issues surrounding silicon and its many uses, and even a little bit of history. So, fascinating discussion with Bill Hightower. I hope you enjoy it, and I will see you on the other side. Join us today. I'm very pleased to welcome Bill Hightower, Vice President of U.S. Corporate Affairs at Ferroglobe USA, to the Northern Miner podcast. Bill, welcome to the show.
Thank you. It's a pleasure being with you today.
It's very interesting and topical to have you here, Bill. Ferroglobe, my impression and my understanding is it has to do with silicon quartz. These are things that are often glazed over or missed when you're at, say, the big mining conferences. Could you tell us a little bit about Ferroglobe and really what you guys are working on?
Pleasure to do so. Great to be with you. Ferroglobe is the Western world's largest producer of silicon, and we have a presence in the Western market in Europe, South Africa, South America, in the US and Canada. The product we make, I know a lot of people are thinking about going to buy silicone at Home Depot or Lowe's and maybe sealing their windows. Our product is in that, but that's not what we're making. We make silicon, and silicon is a byproduct of wood chips, a carbon product, and quartz gravel. And we put it in a smelter, and out comes molten metallurgical silicon. And so that's our role. We're the most dominant producer also in the U.S. But Adrian, there are only 2 producers left in the United States. And we'll talk more about that. But this product is used almost everywhere: semiconductors, solar cells, medical equipment, cars, aluminum, steel. You can't make either of those without silicon.
Okay, interesting. So it is a combination of materials then. Would you call it an alloy?
Yes, it is an alloy, and it is not easy to make. For instance, the Russians have not cracked the code yet on making silicon metal. We're very good at it, and we've been good at it for decades. We're a chief innovator in that area. We're constantly looking for new applications and modifying our product in order to meet customers' needs. China is the most dominant producer of silicon. They produce 80% of the world's demand. So it really has some interesting geopolitical elements to it, and trade is so important of a subject in our markets.
Indeed, there's so much to discuss. When there was the, Silicon Valley revolution and the chips, I guess it was Intel. I'm vaguely familiar with the history. How important was silicon? We hear about Silicon Valley. Can you give us just a little bit of an outline on the history?
Glad to. The Western world had many more operations producing silicon than they do today. And the reason they don't have as many is because of dumping. For instance, in Europe, in the past 5 years, metallurgical companies have lost 50% of market share in Europe due to dumping. Europe does not have a EU industrial policy. Each country manages their own industrial policy. Thank goodness that the United States does have a national industrial policy. And we're maturing more and more in our understanding of things. For instance, the application of critical minerals or critical materials. This is really a significant step for industries like our own. When you go to a doctor and you have an illness, it's after he names the illness that they can begin to treat the problem. And what we've done basically in the United States and in Europe and Canada is that they've named silicon as a critical material. So the number of producers has declined tremendously. However, the criticality of it has increased, as you mentioned, in semiconductors. This is a necessary ingredient in semiconductors. You can't make them without silicon metal in particular. So we see it as a critical component, and we're seeing nations begin to develop policy around critical materials. Silicon is one of them.
Okay, excellent. So just to get a sense then of your operation, are you basically mining certain aspects of silicon, of this alloy? Are you importing all of them and then just putting it together, in a sense, processing it? What is the nature, in a sense, of your operation at Ferroglobe?
That's a great question, Adrian. We're actually miners before we're smelters. We mine, we have our own mines. We have a mine in South Carolina, a mine in Alabama, and a mine in Kentucky. And we do that purposefully because the United States imports over half of its demand for silicon. Over half. For instance, steel, I believe the numbers are we import 25% of our demand for steel. And it's, how much visibility steel has. But silicon in the production, we champion the vertical integration of our production process so that we can assure all of our customers that all of the materials that are feeding into the supply chain, and you know how important the supply chain discussion has become, both at the federal level and industrial level. The supply chain is protected, it's verifiable, it's transparent. We don't use forced labor. We don't use bad emissions. We are responsible, sustainably produced silicon producers. So it's quite a strategic step for us to have that vertical integration of our supply chain so that we can assure the U.S. producers that if a pandemic occurs, the supply won't be interrupted from the dependence on imports. If there is military conflict, it won't be interrupted either. We'll have a domestically sourced supply chain.
Okay, excellent. And when you say you have mines, what are you mining? Is it quartz or what exactly are you taking out of the ground?
We're taking quartz gravel. The process is really interesting because we go into farmland and we, of course, pay the owner of the land. And oftentimes the land is in awful shape. And we basically extract the gravel out of the ground and then put the dirt back, the soil, and we reconfigure the topology of the ground so that if the farmer wants rolling hills with a lake for his grandkids or his cows, we do that. If he wants flat land to be able to put crops in, we do that. So that's our coal mining operation, and the landowners love us because we put the land back better than it was. The other is we have a coal mining capability in Kentucky. We use low sulfur blue gem coal in our process, and we mine our own. And this, of course, gives us a secure supply chain. There are some augmentations to that need for reductant or the coal, and that is biocarbon. We're using biowood products and charcoal in our process as well. So it's not just coal, but we need that carbon atom to come into the process. And that's where we get that.
Okay, fascinating. And finally, just on the nature of the operation, are there any supply constraints? Like when you're looking for, say, gravel quartz, is it hard to find? Or it sounds like that's something that would be, I would imagine, fairly common. And then maybe the real bottleneck is the processing, so to speak. Would that be accurate?
The quartz is the key thing, Adrian, because you've got to have quartz that's pure enough and doesn't have too much iron content. Because if it has high iron content, we can only make ferrosilicon. And ferrosilicon's a great product because you can't make steel without it. So we know it's critical. But what we have to do is get quartz that has a low iron content to make the silicon metal, which goes into photovoltaics, semiconductors, and aluminum, and will soon go into batteries. We have yet to touch on the innovative part of our business where we are developing silicon anodes for the new next generation batteries.
Okay, excellent. And let's start heading in that direction. What does silicon do? What is the big feature? Like, why do people use it? in chips? Why is it used in batteries? Does it just conduct very well? What is the feature here that it offers?
Yes, in batteries, silicon is 10 times more efficient than graphite. And there's some other things at play because when I say graphite, you of course know that about 97% of our graphite in the United States, it comes from China. And now there are some technologies being developed for synthetic graphite that are very promising. But what people don't see is what happens in American industry, the ingenuity that our economy has. And that is, we've just sidestepped the whole issue of graphite and we're going to replace it with silicon. We already, with our partner Coreshell, who is focused on this anodic material, have already created a 60 amp hour battery that at almost 500 cycles has shown very little degradation of its ability to hold energy. And it has some great advantages too. The silicon in the battery, with this application of silicon to replace graphite, we do a couple of things. The battery becomes more efficient. We can charge it faster, maybe 20% faster. It'll hold a charge 30% longer. But one of the great things, and I've been talking in Washington, D.C. about this, is that the battery's lighter. So think about all the war fighters out there, our military, who we're all proud of, and all of their equipment. Can you see them carrying a car battery on their back to run some kind of radio? Well, if we can cut that battery weight in half by the use of silicon, we've helped them tremendously. We're proud of what is happening in that space. And that's one of the innovative areas for silicon. Now, if that demand ramps up, we've got a number of major automakers that are partnering with us in Coreshell in order to make this happen. When they adopt this technology, it's not going to be a gradual adoption. It's going to be a hockey stick, and demand will increase tremendously. But there are so many other applications besides just EVs.
Right. And so it sounds like it's pretty useful. So in terms of the supply chain, then, what is the situation, say, in the United States? Is it a dire situation? You know, if a whole bunch of technology shows up, can you meet demand? What is the situation?
Right now, the U.S. imports over half of its silicon demand. And thankfully, we have a tariff on the China product that comes into the U.S. So very little of that comes into the U.S. This goes back to your opening statement about trade and talking about these kind of issues, because what's happening is even though China doesn't directly import into the U.S., they are so dominant globally that they take their product and they dump it in Europe or they dump it in another country that has good trade relations with the U.S. So those countries then are forced to dump their product in order to just meet their fixed costs and variable costs. So it's really a strategic discussion with the U.S. government that I'm having, that just recently President Trump put aluminum and steel on the 232 tariffs because they're so critical to national security, national defense. Well, you can't make either aluminum or steel unless you have silicon. And so I think this opens up a broader policy discussion about the supply chain for any product when it comes to national security. Thankfully, the U.S. government has begun to identify the silicon supply chain, the steel, aluminum supply chain, other product supply chain, and address that. They could do it better, and we're trying to help them and counseling them on the way forward with that. But it's an important discussion for us to have, because if those overseas sources are interrupted, then you can't make semiconductors, you can't make solar cells, batteries, or body armor. Our product goes into body armor. It goes into ceramics for high heat applications on turbine engines. There are just a number of things it touches.
Now, you mentioned tariffs. So are you able to compete then, say, pre-tariffs? Like, in a sense, my question is, how are you still in business with all of this dumping going on? Are you able to compete on price with these very low prices? How has it worked out for you? How are you still here as a company?
Well, I'm certainly one to invite competition. I think it improves our business processes to have competition, but it's unfair competition where countries that are producing this product don't have emission standards. In the Uyghur region of China, where most of these silicon smelters are, forced labor by the Uyghurs. These are unfair pricing that these companies want to dump globally. We have to be careful to protect our industries. So how are we able to compete? We're able to compete because we have trade secrets and we are very good at incremental innovation in our processes and taking cost out. We've also made it known publicly that we intend to invest in the United States and build more capacity because we see the demand coming. And that capacity is going to be the most competitive capacity in the world. We're going to apply technologies that have not been seen in the silicon production realm, and it's going to be very low cost. And we think the market is really promising in the United States. But just like steel and aluminum, unless we have a tariff regime that protects U.S. industry, we won't have the industry. We just won't have it. But we've got to think strategically in that regard. And thankfully, I think the U.S. government is trying to deal with that issue through the system of tariffs.
Interesting. Now, one of the big criticisms, even from people within the mining industry, of the tariffs is these things like an aluminum smelter, these things aren't built overnight. So, you can put on a, 25% tariff, but there's probably going to be a few years, one could argue, before you actually get those new smelters up and running. What do you think about that? Is that inaccurate in your view? How do you see that issue?
This is a great point, and one we're trying to anticipate because we see the demand for silicon to be increasing tremendously 2030, 2032. And so we're already trying to position for that in advance. But you really do point out a dilemma. They put a tariff on the product. Where are the U.S. producers going to get their product? We can meet the demand right now. We have unused capacity. We have additional capacity we can start up. We also have the ability of switching our furnaces from silicon metal to ferrosilicon to manganese alloys. So we have a lot of flexibility and we have a global footprint. Although all of the production that the U.S. Ferroglobe operation produces here in the U.S., the United States market absorbs every bit of it. So we're not exporting from the U.S., but we have additional capacity and can ramp up. And these smelters are 24/7 operations. They don't shut down, they continuously operate. And they're a real important piece to communities around the United States. They're located usually in communities that don't have a strong economic background. And most of our coworkers are multi-generational coworkers. Our plant in West Virginia, these people, it's been there since 1932. It's got a tremendous history. 4 generations at times work at these plants. But we can meet the demand of any demand increase. That's one of the, I guess, advantages to our industry, at least. I know that won't be the same for some.
Right. So you don't export outside of country as it stands.
In the U.S., that's correct.
Okay, very interesting. And just out of curiosity, breaking down how much of a percentage, say, of your product, say, goes to chips, how much of a percentage goes to, I don't know, you're saying, windows, household, or you mentioned ceramics. Do you have a rough breakdown of, say, like the most common usages of silicon, or is it a more complex question where it's like, well, we produce this very specific kind of silicon for chips and this other kind of silicon for ceramics, for instance?
Yeah, broadly, it's a third metallurgical or more goes into aluminum and steel production, a third goes into chemical, and a third goes into all other. And chemical would be the semiconductor, the polysilicon, and such.
Okay, very interesting. So that's almost surprising. You mentioned steel earlier, but that is quite a bit that goes into steel. And of course, steel is a pretty important component. So I assume, as we start to wrap up here, Bill, I assume, you're mentioning Washington, like I assume there is a dialogue of some kind that's going on with the government, say between, the company and the government.
Yes, a lot of it's education. People just don't realize the number of jobs that we create and how critical our product is. Of course, the Department of Energy has identified silicon metal as a critical material, and it's also on the critical minerals list of Canada and the EU and Australia. But just to step back that I was talking about earlier, to mention that Russia sees it as a real critical industry. There in 2023, they confiscated a ferrosilicon plant that was owned by an oligarch, Yuri Antipov, and he was making ferrosilicon and selling it to various countries. And I'm sure he enjoyed the margin that came with that. But Putin said he was doing something illegally, and he came in and confiscated the plant so that it could be fed into the war-fighting machinery in Russia for the Ukrainian war. So it's an example of how critical it is. And that message, I think, is missed. And I want Washington, D.C. to understand that as they develop policy and try to think about how it is we can rebuild U.S. manufacturing. We can focus on those things critical, not something that's on the fringe, but something's right in the core of U.S. manufacturing and U.S. capabilities.
And maybe we could wrap up on that note of geopolitics. I mean, what is it that we should know, big picture here, about silicon and geopolitics? Maybe we've already discussed it, but maybe just kind of frame it for us a little bit. What should we know about the geopolitical nature of, say, silicon?
Well, the global industry has changed dramatically. We've got hostile nations that don't want to just take market share. They want to take us down as a nation and as a Western world. And I think as we step back and look at it from a high level, we can applaud the fact that the DOE, the Biden administration, the Trump administration have all identified critical elements of our manufacturing supply chain. And they're trying to develop policies about them. You know, this is a bipartisan issue. This whole issue about supply chain and U.S. manufacturing. When I speak to legislators, it doesn't matter whether they're Republican or Democrat. They will rally behind the U.S. worker, U.S. manufacturing, and try to solve this challenge that's being presented to us by these unfairly priced products being dumped in our country and across the world. So we think we're making progress in that, but it's slow. I think when the aluminum and steel industries get that much visibility on the challenges they face, I can only believe that upstream, the products that go into that will also be considered very, very critical, which they are.
And finally, is there anything we haven't discussed about, say, Ferroglobe and silicon that you think we should mention here?
Well, there's only two producers of silicon metal in the United States right now, and there's only two producers of ferrosilicon in the United States. I like to say that with a bit of an alarm because it's a dwindling of this particular core product that goes into so much of American life. It goes into lipstick, it goes into paint, aluminum, our tanks, our war fighters, our semiconductors. Think of how many chips right now we're operating on, Adrian. It is a critical element of everyday life, and a lot of people don't know it. It's like we take it granted when we turn on the water faucet, there's just going to be water there. And I think we've got to take a bit of a harder look at those things which are the backbone of U.S. manufacturing. And silicon is definitely one of those.
And I do have one final question, Bill. What is the biggest challenge that you face at Ferroglobe right now?
It's imports. The dumping effect around the world is hurting everybody's market and hurting everybody's ability to make product. I can be selfish about that and say it's silicon, but I'll tell you, it's with steel, it's aluminum, it's with other products as well. 30 years ago, we were delighted that we had found a lower cost source, and we were always looking for the best cost producer. Now we've discovered there really has to be some fences on that question. It's not just any low-cost producer. We have to ask, how is it being made? Who is making it? What are their intentions toward our country? I think those are very important as we move forward to develop American policy regarding mining and production.
Bill Hightower, Vice President of U.S. Corporate Affairs at Ferroglobe USA. Thank you for joining us and sharing everything you're working on at the company and in silicon.
You're welcome, Adrian.
Thank you once again to the Munich Mining Conference and Aktien Experte.de for sponsoring this week's episode of the Northern Miner Podcast. And thank you to Bill Hightower for a fascinating discussion on silicon and everything that Ferroglobe is up to. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.